Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello my dear students, welcome back to First Commerce Accountancy online classes. Let's move to solve the third sum relates to journal entries. The question is like this: journalize the following transaction in the books of Madhu traders. The first transaction, February 1, 2018, started business with cash rupees 2,30,000, goods rupees 1 lakh, buildings rupees 2 lakh. And February 2, sold goods costing rupees 30,000 for rupees 35,000. Later I'll explain exactly what about this transaction. February 4, purchased goods from Rahul rupees 55,000. February 6, depreciation on buildings rupees 10,000 and 10 fresh capital introduced rupees 50,000. Feb 12, paid salary rupees 2,000 and wages rupees 1,000. See, we have two systems of accounting, that is single entry system of accounting and double entry system of accounting. According to single entry system of accounting, where the recording, the transaction involves only two accounts, to pass the journal entries relates to that type of account, that is called a single entry system of accounting, where only one amount to be debited and another one is credited. If the number of amount to be debited and amount to be credited is more than one, then for such transactions we need to pass the compound journal entries. Okay, so there we should debit more than one account or we should credit more than one account. That type of account, that type of transaction, passing the journal entry for such transaction is called as what? Compound journal entry. So here we can find out some compound journal entries also. So in the first one, started business with the cash. Usually many in the previous sums and all, business started with the just cash, with cash. So there is a single entry. So simple journal entry, but here we can find some compound, we need to pass some compound journal entry, because here business is started with the cash, goods and building. Goods and building. Goods, here it is, goods is considered as stock. Goods is considered as stock like accounting equation, and with the cash rupees 30,000, buildings with the rupees 2 lakh. So at the time we need to pass journal entry for the three accounts, means that one particular transaction includes three different accounts, means totally 4 accounts are involved in one account, means one transaction. Let's see how to pass the journal entry for such transaction. See, in the first case, cash is also increased, cash, and one more account is stock, because goods is considered as stock there, and another account is building, and one more account included in that, capital. So when we are starting the business organization, we can invest cash, or we can bring goods, or we can contribute the amounts for the building also. So here cash is also comes under capital, stock is also comes under capital, buildings is also considered as capital itself. So here cash shows increased value, stock shows increased value, building also shows increased value, and also capital also shows increased value. So here cash is comes under asset, stock is comes under asset, building is comes under asset, and capital is comes under capital account. Then apply the rules of debit and credit. So what is the rule of debit, or what is the rule of asset? Increases in asset is to be debited. So here cash shows increased value, stock shows increased value, building shows increased value, and also capital also shows increased value. So what is the rule of capital? Here increases in capital is to be credited, decreases in capital is to be debited. So here capital shows increased value. What we should do? We should credit that aspect, means we should credit that account. So increases in capital is to be credited. So how we can pass the journal entries, how we can record that particular transaction in the books of journal? We can record the transaction like this. February 2018, February 1, we should record all the debit aspect first, then only after completing the debit aspect we can record the credit aspect of a transaction. So cash account debited, stock account, here goods is considered as stock account is debited, buildings account is debited to capital account. Immediately we should write the narration for that transaction. Business started with cash, stock and buildings. Then 2,30,000 debited and 1 lakh stock and 2 lakh building. So we should add 2,30,000 plus 1 lakh, 3,30,000 plus 2 lakh, 5,30,000 is considered as capital. So we have total 5,30,000 worth capital in our organization, means in the Madhu Traders. Okay, so it is about the first transaction. It is called as compound journal entry. So cash account debited, stock account debited, buildings account debited to capital account. So narration is like this. Narration: business started with the cash, stock and buildings. I hope you understood this first transaction and analysis of this transaction. Correct, right? So we should analyze the transaction properly. Before that we should identify the accounts. After that we should analyze the transaction. We need to classify the accounts. After that we can easily apply the rules of debit and credit. And next one is sold goods costing rupees 30,000 for rupees 35,000. Sold goods. Actually just in the previous sum the transaction like this: sold goods for cash rupees 10,000 or 20,000. But here sold goods costing rupees 30,000 for rupees 35,000. See here 30,000 asset sold at 35,000. Assume 10,000 10 rupees product sold at 15 rupees. Then 5 rupees is considered as what? Profit for the organization. So here 3 accounts are involved here. What are those 3? Can you find out the 3 accounts here? One is, we can easily say that sales, and one more account is cash, because when we sell something we will receive some cash. Correct? Another account affected here is profit or loss account. Say if profit comes to the organization, then that profit is transferred to profit and loss account of that organization. So here sales account, cash account and profit and loss account. Why? Because 30,000 worth asset sold at 35,000. So that 5,000 is rupees. What the deviation comes, that deviation is considered as profit for the organization. So we need to apply the rule here, one rule, that is what relates to profit or loss, means revenues or gains. Increases in revenue is to be credited. Increases in revenue is to, profit is considered as revenue for the organization. So increases in revenue is to be increases in revenue is to be credited, decreases in revenue is to be debited. Correct? Here revenue shows increased value. So profit increase, cash increase, sales also increase. So here sales comes under revenue. So credited, increases in revenue is to be credited. Cash comes under asset. Okay, so asset shows increased value. Value increases in asset is to be debited. Profit and loss shows increased value. Increases in profit, increases revenue is to be credited. So how we can record? Cash account debited to sales account to profit or loss, P bar L, profit or loss account. Narration, goods sold with the profit. With the profit. So 30,000, 35,000 he had received, 35,000. Sales 30,000, profit 5,000. So 30,000, 35,000, 30,000 and 5,000. Next transaction, purchased goods from Rahul. Here Rahul, from Rahul we purchased goods, then it is considered as credit transaction. So how we can record the transaction here? Rahul is considered as creditor. In the previous same case, we discussed about the same case. Creditor Rahul shows increased value. Okay, increases in creditor, increases in liability is to be credited, and purchase is considered as expense. Increases in expenses is to be debited. So entries like this. Here we should mention date February 2 and February 4. Purchases account debited to Rahul's account. Goods purchased on credit. $55,000. 55,000. And continuation of sum. Okay. Depreciation on building. The word depreciation means here, what is the meaning of depreciation? Depreciation means deduction in the value of fixed asset because of continuation usage or because of some obsolescence. Some goods we need to be depreciate the fixed asset. So depreciation means reduction in the value of fixed asset. So depreciation on building. Buildings mele depreciation. So depreciation deduction means it is loss, or we can consider it as expense for the organization. So depreciation increase means depreciation means considered as expense. Increases in expenses is to be debited. So what are the two accounts are involved in that particular transaction? One is depreciation and another one is building, because building's value depreciated here. Building is considered as asset. Decrease in asset, building value shows decreasing in building, decreasing in the value of building, and increases expenses. Expenses shows increased value. So depreciation comes under expense account, it shows increased value. Building is considered as asset, it shows decreased value. And now we need to apply the rules of debit and credit. According to the rules of debit and credit of expense, increases in expenses is to be debited. So date February 6. We should write the debit aspect in the first line. Depreciation account debited to buildings account. Narration, depreciation on building. building amount 10,000. Okay. The next one is fresh capital introduced. Well, while starting the organization, if the owner brings some cash, that is also called as capital. Even after 15 days or in the middle of the year, if the owner introduced capital, then it is also, the treatment for that transaction is also same like the first one. So fresh capital introduced. Cash shows increased value, capital also increased. So cash and capital are the two accounts. Cash increases, it comes under asset. So increases in asset is to be debited. Capital, it comes under capital account, shows increased value. Increases in capital is to be credited. So what is an entry for this transaction, particular transaction? So date February 10, cash account, because cash shows increased value, cash account debited to capital account. Fresh capital introduced. Fresh capital introduced fresh capital. Amount costing rupees 5,000. 5,000. And next one, paid salary rupees 2,000. Here 50,000. Fresh capital introduced 50,000. It is not 5,000, it is 50,000. 50,000. The last one also relates to compound journal entry. Paid salary rupees 2,000 and wages rupees 1,000. On February 12, two transactions are took up. One is salary paid and another one is wages paid. So we can pass compound journal entry for this particular transaction. Like salary is here three accounts are included. One is salary, another one is wages, and to pay salary and wage we have to pay cash. Means cash shows decreased value, wages is comes under expense account, salaries comes under expense account. Wages shows increased value, means expenses increased. Here salary is considered as expense, that expense is also shows increased value. So salary, what is the rule of expense? Increases in expenses account is to be debited. Here also increases in expenses is to be debited, and decreases in cash is considered as asset, and decreases in asset is to be credited. It's to be credited. So how we can record the journal entry, how we can record the transaction in the book? Salary account debited, wages account debited to cash account. To cash account. Narration. Salary and wages paid. 2,000, 1,000. 2,000 and 1,000. Debit column must equal to credit column. Debit amount must equal to credit. So 3,000. Then we need to total this. 5,30,000 plus 35,000, 5,65,000 plus here 55,000 and 10,000, 50,000 and again 3,000. So 6 lakh. I hope you understood the sum along with the analysis part. Okay. First step, again I will explain. First step, we need to identify the two accounts. After that, we need to analyze that whether it shows increased value or decreased value. Then we need to classify the accounts. Then we can easily apply the rules of debit and credit of respected accounts. Maybe cash, maybe asset, or maybe liability, or that accounts maybe relates to expense, revenue, or capital. Thank you for watching this video.
Don't forget to like our video and subscribe our YouTube channel for all the updates.